Talk 100.3 if you want to get in contact with us. We'll be discussing more about the Olympics opening ceremony tomorrow night. A lot of matches already underway in the football and the rugby, even a world record in the archery thanks to the women in Korea. But moving along to finance, the US economy grew at 2.8% in the second quarter, which is much more than expected. A lot of, though, the big mega cap tech stocks, they all fell back. And you're trying to attribute it, Neil, you think a lot of it could be having to do with this uncertainty with the presidents in the United States and the upcoming election.
More often than not, we've seen whenever there are elections underway or just before the elections, the market does take a little shaky route. And then when there is a sudden presidential nomination change, you could see it change trend either direction. And this time it's taken the red route.
Well, consumer spending certainly helped propel the growth number for America's GDP, as did contributions from private inventory investment and non-residential fixed investment. On the downside, imports, which subtract from the GDP, actually jumped 6.9%. But to get more details on all this, we are joined by the expert extraordinaire, Sandeep Jadwani, joining us once again. Thank you for your time this afternoon.
Hi, thank you so much, guys, and very, very good afternoon to you all.
It's great.
Welcome back.
We do appreciate your time. Looking towards particularly the markets in the US, we saw a huge downturn yesterday with these mega cap stocks, performing far worse than expected. Tesla was down 12%. YouTube's earnings came well short of where they had been forecast. But today we've actually seen the US economy grew at 2.8% in the second quarter for 2024.
Correct. So, the numbers that you spoke about, U.S. economy grew, they are lagging numbers, okay? And the stock pricing that you're seeing today are leading indicators because stock markets are so efficient that they start discounting the future growth, and that reflects the stock price and the movements in the stock price, okay? So, that's the two things. And the prime reason for this is twofold. Number one, will inflation be controlled as interest rate cuts are announced, but we don't know when and how much. Okay, So that's one uncertainty. The second uncertainty is what Neil spoke earlier about a red wave. Okay, and that is pro-business.
Right.
Okay, so once we see how the power shift happens, the narration changes around more accommodative policies to more conservative and protectionist economy strategy. That will have a huge impact on how the stock prices perform. Remember, the stock market and the economy are two different things. They are used together, but they both are totally different.
You spoke about two different aspects of it, economy and the stock market, but also a rate cut in some different part of the world. Could that also impact the stock prices in some other country? Like China has done rate cuts back to back. Would that be impacting the US markets and also maybe the Indian markets?
So China's rate cut, what does it signify? It signifies that China needs to push towards more growth of the economy, and that can only happen when the money becomes cheap.
Right.
Cutting interest rates means it is more stimulating the growth of the country. Or on the other hand, ensuring that the interest rate burden on the existing companies is not as high. Okay. And we all know that real estate market in China has really taken a battering for the last 2.5 years. One of the biggest indebted companies in the world is from China. And China, since it exports, it's an export-driven economy. Cutting interest rates would mean that their currency cheapens or currency becomes it depreciates, which will impact its export competitors, which could mean India, it could mean Bangladesh, it could mean Pakistan, whoever are the major export-driven economies. Okay, but it may not impact US because US is a consumer. So it's consuming cheaper things. US consumers may have more money saved if they're buying something cheap. On the other hand, the political instability that comes in where there could be tariffs on Chinese products,
Right.
which would mean that they would be at par priced with non-Chinese products.
When we look at globally, everyone is looking towards the election in early November in the United States. Will a change in party, just say President Trump gets in and the Democrats are out and the Republicans come in, how do you see the change will affect the US market?
So the change will be positive change, majority on a majority basis. However, there could be few things which were on a global agenda that may take a backseat. For example, presidential candidate Donald Trump, he will ideally not be for green energy and clean energy.
Okay.
Okay, which means he will remove subsidies on electric vehicles, which today Tesla enjoys a lot.
Mm-hmm.
Okay. Donald Trump may promote ensuring that cars are manufactured in the U.S., majority partisan, so that there's enough employment in the U.S. So companies like General Motors and Ford could benefit versus a Tesla.
Yeah, well, he was always working very closely with Apple. He was trying to convince them to make the iPhone in America again.
Yeah. But again, Donald Trump is pro-India as well. Okay, so products coming in or getting imported from India could be beneficial, because then again it means it's cheaper. At the same time, there's more money in the pockets of consumers because they're buying something that is cheap, but it is not ensuring a competitive edge to China. Because we all know that this tariff war is between U.S. and China has been going on since the first term of Donald Trump.
Right. Now, you mentioned about Donald Trump being a pro-India president, and that probably could help, things work around in that fashion. Does a political change or a scenario in political leadership change impact countries like India from that perspective, that the stock markets would react accordingly?
Yes. It does impact. So whether positive or negative, that's
irrespective.
okay. But it does impact, because then what happens? Countries that have, if you notice, Apple started off their manufacturing unit in India, moving away or diversifying away from China, because there are a lot of particularly, because there's a lot of because there's a lot of tariffs and restrictions being imposed on the semiconductor chips.
Right.
Okay, and that typically, if it's getting into India, it is not a threat, because they both are allies, right. US and India, for bilateral trade. It's not unilateral; it's bilateral trade.
Well, when we look towards that upcoming election, I think it's going to be fascinating to just try and read the impacts on what will happen. We saw President Biden step down from the election race. He's still going to be president until January. Did his stepping down have any impact directly on the market?
No, I think he was always priced in to lose, but he stepping down actually adds a different twist to the whole spectrum at the moment, because now we have the vice presidential candidate who is I may not call it favorite, but is better accepted than President Joe Biden himself. Okay, so that's a very, very good move by the Democrats, and that really makes a lot of sense. It would be a tough fight, I would say.
Sandeep, we've been talking about the American elections and the American markets. A quick focus before we wrap this up towards the Indian Union budget and the repercussions on the Indian stock markets. Also, 2 days back to back in the red.
So, see, any budget that gets announced, there are two things that didn't go well for this. One was the taxation bit of it, because that is primarily the major thing, that when you are putting in your filing your taxes and returns for property, number one is the indexation. So ideally, if you have inherited property 20 years ago and today if you go out to sell, surely your book value or the purchase price 20 years ago would be totally different than what it is today, probably 20 folds. Okay, so you would be taxed from that day onwards, from the time probably your grandfather would have purchased the property, and you'll be taxed on the differential, the profit. Okay, and that's huge. There's no indexation benefit. Second is that to stimulate the growth in the economy, now you have long-term capital gain tax that went up from 10% to 12.5%, which is 25% more.
Right.
Okay. However, the tenure for a long-term capital gain versus a short-term capital gain for certain assets changed from 36 months to 24 months, which means that it would be more speculative at the moment. And that could drive inflation just from the price perspective. But when it comes to tax, it could it could balance the inflation out. So we still have to wait and watch how it transpires into which category of consumers.
Sandeep Jadwani, we always appreciate you coming on, and you make what seems like such a complex topic ever so simple. You're just a fountain of knowledge. We appreciate your time as always.
Thank you so much, guys. Always happy to enlighten your people.
Yeah, he's always great to get on. There's Sandeep Jadwani here on TSB Talksport Business, and yeah, fascinating to see just the market factors things in, and if there is a change of presidency that's running the USA, I just think around the world, doesn't matter left, right, centre, the market does tend to respond when there's change. There's a little bit of hope. And I think that's kind of, a lot of the times he's referring to.
That's right. And that change could be either ways. It could go up, it could go down based on the hope or the speculative downtrend that could come in. And thus, to absorb the shock, the market reacts almost instantly. So what could be a downward trend, maybe 3 months down, the market starts sliding down to reach that point from right now to ensure that you don't just go down dipping on that day.
05868 610